Well, while Oklahoma has fared better than most of the country, all you have to do is open up a third quarter 401k financial statement to know none of us are getting out of this unscathed. Earlier, I visited with Gary Simpson, the Endowed Chair of Commercial Banking at Oklahoma State University, about how we got here and where we may be headed. So how historic have recent events on Wall Street and in the banking industry, how historic have they been?
They have been historic, no question. What we're seeing on Wall Street is definitely an unusual event. To see is particularly the large investment banks that have had so many difficulties that we hear about all the time, that is unusual.
Now help us with the definition. What is the difference between an investment bank and the commercial banks where I may have a checking account?
Yeah, they're very different. A commercial bank, their primary job is to take deposits from local customers, just folks like you and I, also businesses, also government, and then take those deposits and make loans into their community for people to start businesses, for people to buy homes, for people to buy cars. So that it's kind of a take deposits, make loans. That's what a commercial bank does historically. Now they do other things, but that's fundamentally it. An investment bank historically had a very different role. They would go to companies, usually large companies or large governmental units, and they would help them issue stocks and bonds. They would provide investment advice as to when to make those issues. They would do legal work, the whole thing, and they would get those stocks and bonds transferred from the original issuer to investors, and those who would ultimately hold the bonds. So they were really middlemen. They would transfer stocks and bonds from the issuer to the ultimate holder. That was historically what they did. Then they changed their business model up some. They went into mergers some, then they went into derivatives some. But ultimately what got them into trouble was they started to invest in mortgage-backed securities and hold them for their own account. They became investors instead of basically agents for other people. And to do that, because they don't have deposits, they don't take deposits, they had to borrow the money to buy the investment. So they became heavily leveraged, and there were no restrictions on how much money they could borrow. So they took huge amounts of leverage and bought investments which turned out to be very risky.
And I think the word restrictions on what they could borrow, they are regulated differently than the commercial banks.
Definitely. The SEC is the primary regulator for investment banks, whereas the commercial bank has either the Federal Deposit Insurance Corporation or the State Commissioner of Banking, or there are several regulators. If you're a national bank, you have the Comptroller of the Currency, and then there's the Federal Reserve, which also has some regulatory responsibilities. So commercial banks have quite a few regulators.
Now, even though our banks here in Oklahoma may be regulated a little bit differently, is it fair to say that we will still feel the impact of what's going on Wall Street?
It's certainly possible that we will feel the impact. There's so many things happening, and it will ripple through our economy. And what you're seeing on Wall Street is part of a problem, but the problem is bigger than just Wall Street. Part of the problem is on Main Street as well. We're all interconnected in this thing, so we will feel some of it.
So I have to ask, is our money safe?
Your money is safe if it's in a commercial bank. The reason it's safe, really there's 2 or 3 reasons. Number one, the commercial banks in Oklahoma are solid, they're safe. They have pretty strong capital positions. They were fairly conservative in their lending practices, so they don't, most, like 95% of them do not have serious problems with past due loans now. They're not having to foreclose on a lot of homes now. In Oklahoma, we're not seeing that at the banks. So they're pretty sound. And the last thing is that our economy is somewhat immune to the turmoil that we're seeing in some markets, in some parts of the country, like California, Nevada, Arizona, and also some in the Midwest around Michigan. Those parts of are really being hit, and we're better off than they are.
Now, I just got a third quarter statement, and I can tell you I don't feel better off after seeing some of the investment portfolio.
That's true. Your investment portfolio is not like your money in a commercial bank. It is, if you put money into the market or certain uninsured bonds, then you are susceptible to risk, and you will experience some fluctuations in the value.
Yeah. From your experience, is it fair to say that you believe that we will see more regulation in the future?
Yes, I think we definitely will. It's very common when you go through a period of time like we're going through that you would get more regulations. We saw this with the savings loan crisis 25 years ago. And there's a good reason to do that. We always need to rethink our regulations. Now the hope is that we get it right. We don't leave some people unregulated that should be, and regulate more heavily some that maybe were not the problem.
To learn how the financial meltdown could affect credit availability, visit okhorizon.com and click on Value Added.